Yeah, I think everyone is just in the process of joining. So, Assalamu alaikum, everyone. Thank you very much for joining this webinar this evening. Uh, First time we're having it in Pacific Standard Time, I believe. So, wanted to thank specifically Brother Nadeem, our East Coast friends, where it's 11 o'clock at night over there, and hopefully they've got an extra cup of coffee to keep them awake. But once again, thank you very much for joining this evening's webinar, and we're looking forward to presenting all to you. I'd like to start off by introducing myself. My name is Brother Mohammed Ladek, and I've been within the Vancouver community for over 45 years now. So seeing a lot of the names on the participant list is extremely impressive to see a lot of familiar names. So assalamu alaikum, everyone. We'll be presenting Understanding Halal and Values Investing, facilitated by myself and Brother Nadeem. I'll give you a bit of background on Brother Nadeem here. He's got over 20 years of investment experience and is responsible for managing the model portfolios of the firm's clients. Prior to joining ShariaPortfolio Canada, Nadeem held roles in private wealth management in firms such as Oppenheimer in New York, to HSBC and Canaccord Capital in Toronto. Where he was responsible for advising and managing portfolios of business owners, professionals, and high net worth investors. Nadeem graduated from Concordia University with a Bachelor's of Commerce in Finance and is a CFA charter holder. Outside of finance, Nadeem has a son of Pakistani immigrants to Canada, is happily married with his wife and 4 children. Not sure how he does it with 4 kids. He enjoys strength training, traveling, and cooking. He's fluent in English, French, and Urdu, so we can always change this webinar to French or Urdu if anyone wants. So I'll pass it on to Brother Nadeem. If you've got questions along the presentation, please use the chat or the Q&A section where you can record your questions. We'd love to hear your questions, and we'll address them at the end of the presentation after Nadeem is finished, and I'll facilitate that process. So Nadeem, over to you.
Thank you. Thank you, Brother Mohammed. Assalamu alaikum, everyone. And thanks again for joining us this evening. The kids are all tucked away in bed and sleeping, so actually this is a peaceful time of the day for me. So everything's great. So inshallah, for tonight's presentation, this is going to be mostly educational and based. But before I get into that, a quick disclaimer here. Again, the presentation will be mostly about educating and informing the community and the attendees here today on what exactly is halal investing, and of course some of the values of value investing. So standard disclaimer here, we are not responsible for anything. Of course, speak to your financial advisor or professional before you make any decision. So the agenda for today, first, we're just going to kind of dip into a little bit about ShariaPortfolio Canada. For some of you who, especially for those of you who've never heard of us, there might be a few folks here that have heard of us. Nonetheless, we're going to just quickly talk about that. And we're going to dive into the stock market, just cover the basics. We understand that on this webinar, we get all types of investors. We get the new ones, we get the experienced ones. For some of you, this might just be a quick history or like a quick 101. For others, this will be like a new educational kind of experience, hopefully. We're going to briefly talk about value investing, what that is. And of course, Sharia compliance. What does that mean when it comes to halal investing? What exactly is it? How do we do it? And what makes it compliant in that respect? And of course, finally, we're going to dip into how to get started if you were interested in our service and what we have to offer. What are the next steps as far as becoming a client of the firm? And of course, we're going to end it off with hopefully a healthy Q&A. And I think I tend to actually look forward to the Q&A more than anything. I'm sure by the end of this presentation, you'll be sick of me just being the only one talking. So first off, ShariaPortfolio, who are we? And first of all, what's our purpose? And I always say this, our mission statement, our objective is quite simple. We are here to help Muslim Canadians achieve their financial goals while making sure it adheres to their Islamic values. that's our mission statement. That's kind of, the raison d'etre as far as why, what we're trying to do here. Specifically in Canada, we are licensed with the Ontario Securities Commission. We're licensed also in BC with the BCSC. And as well, it's not on the slide, but we recently are also registered in Alberta. And inshallah, the plan is hopefully we'll add more provinces as as time goes on, and of course as demand goes on. Now, the parent company is ShariaPortfolio. It is based in the U.S. and they've been around for about 17 years right now. They're licensed with the SEC in the US. And so for 17 years, they have been working with American Muslims and doing what I said, what I stated earlier, which is helping, Muslim Americans reach their financial objectives, but doing it in a halal way. Currently now with ShariaPortfolio Canada, we have clients in Canada, in the 3 provinces that I just mentioned. The parent company has, of course, clients in the U.S. and of course, and with the expansion here in Canada, we also now are taking on clients internationally. The firm is solely dedicated on Sharia compliant portfolio management. It is solely dedicated on that. So in other words, we're not a firm that has a Sharia offering and at the same time has non-Sharia offerings. This is something that we specialize in, that we're devoted to. And so that's, again, that I think that's very important. And as a firm, we're no different than any other, in terms of the products that we offer. We're not, we offer a full suite of products, when it comes to types of accounts, non-registered accounts, RSPs, TFSAs, LIRA, RIFs, RESPs. So it's the full suite of products in terms of the types of accounts that we have. We do have 2 types of offerings. One is the access offering, which is kind of our more customizable, comprehensive wealth management, where it's an actively managed portfolio. We're including products such as exchange traded funds and individual stocks. This is where the model portfolios kind of come in. We have a variety of portfolios depending on the type of investor you are. My role as a portfolio manager is to right now do a little bit of both here. Work with the clients one-on-one, doing the financial advising, and at the same time managing the portfolio. And of course, then the second offering we have is Express. This is kind of the more economical solution and it's very attractive to a lot of the new investors out there that are kind of looking to get into the market. The young investor who, wants to start up, say, for example, an education account, an RESP or something of that sort, where in this offering, we're strictly using exchange traded funds because we think that's an ideal solution for that type of a client. And you can start with as little as $1,000, whereas with the access, the minimum is $100,000. And finally, also just a couple of last things here. We are partnered with Fidelity Investments. Some of you have probably heard the name. Fidelity is one of the largest global financial institutions in the world. They manage about $3 trillion of assets under management. And so with the partnership, what Fidelity really is doing is they act as the custodian. They're the holders of the asset. So all our trading, all our administration is actually going through Fidelity's desk here in Toronto. And, and I think we feel that this is something that clients can, that clients actually value, because they're not just dealing with ShariaPortfolio, but they can be rest assured that their investments, their accounts are actually being held with a top tier global financial institution. And Fidelity is a part of CIPF. That's if you've never heard of CIPF, I'm sure everyone's heard of CDIC. At the bank level, you're guaranteed $100,000 in the event if a bank were to go insolvent. Well, CIPF is in the investment firm version of that, where in the event if Fidelity, for example, were to go insolvent, your portfolio, your account is insured up to $1 million worth. So those are just some of the basics of who ShariaPortfolio is. This is our team here. We do need to update the slide because we've had actually a hire here in the Vancouver area, a financial advisor by the name of Shamil. And Shamil is a great guy, young. He's really, really enthusiastic. And like I said, we do have to update the slide. I apologize that we didn't do it today, but rest assured, this is just kind of a testament as far as, the growth that's happening in Canada. But of course, the team is led by Noshad. He is the CEO of the firm. He is, the individual that started the firm back, in 2003 in the US. And of course, with the demand that's been coming into Canada, it's forced his hand to expand here and service this market, inshallah. I'm joined by Sabina Murshi. She's also VP and really kind of heads the operations of the firm in terms of the back office. Irfan is our Chief Compliance Officer. He makes sure that everything we're doing, it checks in with the regulators. And so he is kind of, the Chief Compliance Officer. Salahuddin is our marketing manager. He was instrumental in putting this webinar together and handles our marketing side. Of course, is myself. And then Peter Barron, who handles our institutional sales desk. So first, I'm just going to dive into the stock market here. What is the stock market? Essentially, what stocks are their ownership of business. It's as simple as that. When you're buying shares of any particular company, what you are doing is you are buying ownership of that. And the value of those shares are really kind of based on the performance and the business of that entity, of that underlying entity. So, that's, and there are different types of asset classes, of course. So stocks and equities, that's just one asset class. And that's kind of also, a very important asset class, I should say, especially the fact that we're a Sharia compliant firm. But you have other asset classes as well, such as bonds, which are interest-based fixed income securities. Now, typically, bonds are not considered Sharia compliant, so we really don't get into that. But as portfolio managers, we do keep an eye on the bond market because at the end of the day, the bond market does give us telltale signs of the economy and what's going on, because it is an important element when we're looking at the overall economy and just kind of getting analysis of the market. But it is not an asset class that we actively invest in. However, we do invest in sukuk. And sukuk are basically structured fixed income that are really Sharia compliant. So these are Sharia compliant fixed income products. Some people like to call them, Islamic bonds. And the explanation that I'll give on sukuk is again, this is just for the general public, is this. Typically, the explanation I give is actually an example. So here in Canada, for example, let's just say, the city of Vancouver, the city of Toronto, let's just say was building a toll highway, right? This is an infrastructure. This is an asset. Typically, what they do here in Canada and the Western world is the government, they raise debt, they issue bonds, they tie an interest rate onto it, and you get a value. And you know what? That's how they kind of fund this asset. Now, the sukuk example would be something like this. Instead of, say, Canada, you have a government, say, Malaysia, who wants to build a highway. And in essence, what they're doing is the debt structure operates more like a lease agreement versus a debt. The sukuk holder is not entitled to any interest. However, they are entitled to a percentage of the revenue. So fundamentally, there has to be a tangible asset behind a sukuk. It has to be generating, typically they generate revenue, and the sukuk holder is entitled to a percentage of the revenue. So in the spirit of the contract, it operates more like a partnership and a lease agreement than it does as a debt covenant. So putting these three assets together, and of course, there's also other assets that I'll dive into, but our job as a portfolio manager is to kind of, bring all these three together. Of course, stock market is really kind of the focus here for us right now. So I'm going to quickly dive into that. If you've never invested a dime in the market, so this is going to be a good history lesson, or again, a good educational, experience for you here. This is just a chart of the S&P 500, just to kind of give you an idea as far as, the periods that have happened, especially, during, I would say just before the global financial crisis, because for whatever reason, even if you've never invested a dime in the market, you've heard about the financial crisis, and so it's worth getting the elephant in the room. It's worth talking about the elephant in the room and saying, look, here was a really bad time for the market. However, if you look at the grand scheme of things, right, that period here where it's circled, in the long run, it was a blip in the road. And that's really, you know, when we take a look at the stock market on a long-term basis, it has been trending up higher, and it continues to trend up higher. And so, you know, when we talk about, you know, the stock market, the history, and even the present day stuff that's happening, you know, over the long run, what's been proven is that markets generally will continue to rise, although they do go through some cycles of ups and downs. But if ultimately, if your time horizon is long, and you know your objective is to grow your money, we feel stock and the stock market is a good place to be. Now, the other thing here is, why are we going to invest? You know, we get clients from all walks of life as far as what they want to do in their life, and that's, you know, I go back to that, you know, the statement as far as, you know, we're here to help Muslims reach their financial objectives. So the thing here is what is your financial objective? For different folks, it's different things, right? Typically, of course, retirement is the big one, but it can also be education. It can also be charity. It can also just be regular, you know, a regular objective of just growing the wealth, right? And just kind of using that as a way to enjoy life and here sit on a beach and you know, just enjoy life. And of course, there's saving taxes as well. People will have different objectives. We have primary objectives, then we have secondary objectives. A primary objective could be, look, you know what, I want to retire, but a secondary objective could be, you know what, after my retirement, I would like to give, you know, something to charity, right? So, you know, our role here as investment professionals is to really kind of get to know the client and figure this puzzle out and figure out, you know, what the client, what the investor or the client's objectives are. And then based on that, you know, we would be able to kind of provide a proper recommendation. So just touching on taxes here, and this is, of course, you know, we live in the Western world. I don't think we have many people from the UAE or any other you know, tax-free country here. So it's worth mentioning that, you know, when we're talking about taxes and when we're talking about return on investments, this graph just kind of speaks to the fact that when you do generate a rate of return, in most taxable accounts, that return will get taxed. And so this bar graph really is just trying to show you that when it comes to equities, that's where you really, from a tax perspective, can actually, you know, keep most of your return. You can see that on a 9.7% return, you know, you're coming back out of, you know, net return, you're looking at about a 6.9%. And whereas if you're looking at bonds, and again, we don't invest in bonds, but it's worth kind of knowing what the rate of return on bonds is, because really bonds are interest is taxed at the highest rate. And, you know, as you can see, that almost half the return is kind of taken away. So one thing that we do is that we do obviously factor in taxes when we're building portfolios. There are some investments that we think are suitable in are more suitable in registered accounts like RSPs and TFSAs, where you're not so exposed to taxes. And then there are some other securities where we feel that, you know, can be in non-registered accounts or taxable accounts, or should I say. So that's kind of our job as far as when it comes to taxes. We're not tax specialists. We don't give advice on tax, but as a professional, we do have to know some of the basics, especially when it comes to investing our clients into investing our clients' investments. This slide here just kind of talks about the life cycle of revenue streams. Like right now, for most of us who are, you know, in their active years of working, of course, your revenue primarily is coming from your income. 90% of it is coming from, you know, your Monday to Friday, your 9 to 5, or however you earn your living. And, you know, you might have some money kind of tucked away, you know, in stocks or other investments that are kind of giving you that supplemental income. Whereas, you know, as you kind of go through your life cycle, what you notice is that, especially when you come into retirement or nearing retirement, that primary source of income starts to go down. And now you're starting to focus in on other revenue streams, such as stocks or other investments, right? And so, again, as portfolio managers, as, you know, investment professionals, you know, we really try to, you know, look ahead and explain to clients that this is a life cycle that's going to happen. And, you know, you want to be in a position where your portfolio can be able to kind of, you know, more than just supplement your income, but maybe be even in some cases the primary source of income. Other investments that I'll speak about, I know we've spoken mostly about stocks and bonds and sukuks, but of course there are other investments like such as real estate. You know, of course, in the Muslim community and even really kind of the immigrant community, you know, the new immigrants, whether you're, you know, real estate is kind of been the go-to investment. It's a tangible asset. You know, it's something that they can feel. And so I know when my parents, or I should say my parents' generation came, you know, stocks and you know, intangible assets was, you know, foreign to them, whereas, you know, real estate was something more tangible. I think that is starting to change. We're starting to obviously, you know, as the world has gone smaller, as the new generations kind of come up, real estate is still an important asset. However, you know, it's different from what it was maybe about 15 to 20 years ago. But nonetheless, it's an asset class that's another kind of type of investment. There's also commodities, business startups, and other currencies. So these are all just kind of other investments that, you know, when we're speaking to clients, we try to figure out, okay, you know, if they have any other, what their balance sheet blueprint really looks like. And so we do kind of, you know, dive into some of these other investments that they may be involved in. So first, just value investing. What is value investing? You know, it's an investment operation. This is just a quote from Graham and Dodd. And you know, this is a quote that's posted. I have another quote that's posted that I'll share with you. But an investment operation is one which, upon through thorough analysis, promises safety of principal and satisfactory return. Operations not meeting these requirements are speculative. So, really, what this means is that our job as portfolio managers, you know, we are doing our, you know, we're rolling up our sleeves. We are looking at every single investment that we have in the portfolio, and, you know, you know, our role is really to kind of assess a value on any business, and that's really what it comes down to, is trying to take any company or any investment out there, break it down and figure out, okay, here's where we think the value is, and here's where the market, you know, is placing it at. And if we think that, you know what, the market has got it wrong and it's down, you know, it's discounting it, we will take a position on of course, vice versa. If we feel that, you know, the market's gotten ahead of itself and our values here, we'll stay away from that. You know, so specifically, what that means is fundamental analysis. That's the rolling up the sleeves part. That's where, you know, we're looking at balance sheets, income statements, cash flow statements of companies, you know, figuring out as far as, you know, what the financial health of these companies are. And, you know, we will, based on that, it kind of gives us an idea as far as what are we buying here. You know, we are buying a business, and that's what it comes down to. And it goes back to that idea of what I was talking about value and perception. You know, we think it's here and the market has it here, or vice versa, right? We also do use technical analysis too. Technical analysis kind of, I know it's not up here as a bullet point, but you know, technical analysis really just kind of involves the study of the quantitative metrics of the market. That gives us a sense as far as, you know, I don't want to say timing the market, but you know, just gives us more. It's a more tactical strategy as far as, you know, we think short term the market might, for example, be a little bit, you know, overbought, and maybe we will kind of, you know, take the foot off the gas pedal, or in some cases, you know, as Warren Buffett would say, this probably, you know, walks into that statement, is that be fearful when others are greedy, and greedy when others are fearful. So, you know, going back to my example of putting the foot on the pedal or off the pedal, sometimes technicals can tell us that the market is greedy or it's fearful. And so those are just some of the things that we use. And I think, this quote really it's a quite powerful quote. I mean, if you really look back, I mean, you don't have to look too far back. In 2020 in March, when the world was kind of going upside down and we were getting locked down and, markets were going haywire, there was rampant fear out there. And, that was probably the time to be greedy. And likewise, if some of you guys here might be old enough to remember the tech bubble back in 2000, where, everyone thought that everyone and their mother wanted to be in the stock market. The taxi driver wanted to be in there. And that was just too much. There was way too much greed out there in the market. And that's when you needed to be fearful. So, of course, Sharia compliance, this is kind of, I guess the meat and potatoes of halal investing and why some of you guys might have attended. What does that mean? Really what it refers, again, I'll just kind of read the statement here, but I'm going to go obviously more into it. It refers to the investments made in securities which conform to Islamic principles when these investments adhere to the guidelines of a trustee Sharia advisory board that are considered to be Sharia compliant. So, ShariaPortfolio doesn't act as the imam, sheikh, or scholar in this. We're not here to necessarily put our rules and say this is haram, this is halal. What we do here is we do follow a Sharia advisory board, and that advisory board is IOFI. It stands for Accounting and Auditing Organization for Islamic Financial Institutions. This is a Sharia council made up of about 15 scholars across 20 different countries. Sorry, I have it the other way around, 20 scholars across 15 different countries based out of Bahrain. And, these guys are they've written the rule book on Islamic finance. It covers everything from lending to investment to insurance and so forth. We're only focused, obviously, on the investing part. And so what they've done is they have given us kind of a guideline, and these are basically specific. So this is the eye test, where you don't really have to be a financial genius or an Islamic scholar to figure out. Of course, we're not buying companies that are in these sectors. Of course, we're not buying casino stocks. We're not buying shares of Budweiser or any of these, companies that are in this. This is the eye test. However, it's a little bit more than that. In fact, there are certain ratios. For example, it's not enough that the eye test has to be a little bit more than that. So really, the IOFI has kind of told us that 95% of the company's income has to be coming from halal sources, right? So meaning to say, the example that I'll give you is, let's just take a company like Target, the store. Target sells everything. Now they might, in some cases, they might sell, some haram products. However, if no more than 5% of their income is coming from those sources, then it is deemed to be compliant. However, on the flip side is, if it exceeds that 5%, then it is not compliant, and we will not even consider it. And the reason why I gave Target as the example is Target does pass the Sharia compliance test, but Walmart doesn't. Walmart's 5% ratio, actually, it's higher than that. And, one of the reasons is that they are the largest seller of weapons in the US. And that could be a reason, maybe a main reason why they failed. Just a quick note here, preferred shares, they are not considered non-compliant. We only invest in stocks, sukuks, mutual funds, and ETFs that do meet the standard. So, we screen all types of investments. It's not just stocks, it's sukuks, it's mutual funds. When we look at a mutual fund, the holdings in the mutual fund have to be compliant. Same thing with the ETF. So that's the eye test. That's the income. The other thing that I'll kind of dive into is companies must meet some certain financial ratios. And these financial ratios are basically based around debt and interest. In the spirit of this, really what we're doing is we're not buying companies that are excessively using debt. And that's the main thing, is that, you don't want to, in the spirit of everything, is that we're fundamentally buying companies that are, number one, not using too much debt, and number two, not taking in too much interest. What that means for me, of course, from an Islamic perspective, that's a good thing, of course, but even from a business perspective, I think, and you'll come to see that fundamentally it's a good thing to have, to not be investing in companies that are using too much debt. And this is the slide that shows for it. So, talking about Sharia compliance, for me, the big thing was, and I tell this to every single person who's looking at us, thinking about opening up account and sending us money, is that don't think that just because we're putting this, haram restriction, that it's going to come at the cost of performance. It's not. In fact, I make the argument that Sharia compliant investing actually helps performance. Now, the chart that you see here, this is a year-to-date chart. Year-to-date chart, and it, the benchmark here is, if in terms of Sharia compliant investing, is an ETF. It's called the SPUS. This is actually launched by our sister company, SP Funds. And really, what it is, it's the halal version of the S&P 500. The out of the 500 stocks, the ones that meet the Islamic standard, they're put into this ETF. And so this ETF has gone head to head with, I put the blue line, which is the S&P 500, and the red line, which is the S&P TSX Composite. Year to date, you can see that there's a huge gap. And, it's not a coincidence. I think, of course, 2020 has been an extremely volatile year. And what ends up happening is, the cream rises to the top, especially, in rough times. And that's what we've seen, is that when the market got hit, those companies that were heavily leveraged, that had bad balance sheets, they got hit the most. And so, again, it goes back to my point that I don't think, halal investing should come at the cost of performance. I think it's the other way around. Of course, this session is not about product. I don't want to delve too much on our fund or our portfolios. In fact, there's another upcoming webinar on December the 3rd that I'll ask everyone to join, and in that we'll probably dive more into our portfolios. But I didn't want to, I didn't want to not show this, because this is something that I think as a firm we're really proud of. So how do we get...
If you don't mind, Nadeem, I'll give you a bit of a breather, but just to remind everyone, if they have any questions whatsoever, please type them into the Q&A chat. We've got a couple already so far, but if there's any other questions throughout the presentation, please record them and then we'll address them at the end of the webinar. Also, if I could ask Nadeem, I know you didn't want to get into product, but there seems to be this perception out there that Sharia compliant investments are not typical investments, like blue chip stocks. Could you talk about that a little bit in terms of what types of investments or what types of stocks or what types of companies are Sharia compliant?
Sure, absolutely. So, where the difference between us and say any other firm is exactly this, where, when you take the example, again, to answer that question, I'll answer it with an example, right? The S&P 500, you have 500 stocks in there. And out of the 500 stocks, of course, you're stripping away, these sectors, and you're stripping away the companies that don't meet this criteria. So ultimately, what we're left with are about 200 companies. Again, I'm just going on the S&P 500. We can take a look at other markets, but there were about 200 or so names. Those names include companies like Apple, Microsoft, Home Depot, Procter and Gamble. A lot of companies that a lot of people would be familiar with. What it does not include, of course, are companies like Budweiser, the casino stocks, even companies like an airline company like Delta, believe it or not, which we did previously own in previous years. It failed the debt ratio, and so it's not in there. But these the names that we're buying in our portfolios are liquid names. We're not getting into any, for the most part, we're not getting into small cap, penny stocks, micro caps. That's not really our focus. Our focus is mostly on large to mid cap names that are traded in the North American markets. Okay, so getting started, again, there are a couple of ways if you're looking to kind of get invested. You can obviously do it yourself, and that's like a self-managed, brokerage account. You go online. Again, some people like to do it themselves, and that's fine. They feel that they don't need an advisor. You can go ahead and do that. And in that case, what you're really doing is you're buying and selling stocks, on your own. If you wanted to make it if you wanted to do in a Sharia compliant way, what we would suggest, or if I can guide you, is that you would have to kind of look at the annual reports and the prospectus of these individual companies. And of course, if it's a mutual fund, you want to kind of take a look at the prospectus of the mutual fund as well. But this is you doing it on your own. Whereas if you're going to be, let's just say, to take on a service like us, where we are full service, like I mentioned, we have the two type of service here: the express service, where it's an easy startup. You can start with as little as $1,000. It's a low management fee, of 50 basis points. And really, what we're doing is we're using our exchange traded fund models to service clients and to hopefully reach their objectives. The second offering that we have is Access, which is more of a hands-on approach. Portfolios are more actively managed. And now here, the investment strategy is now more than just ETFs. ETFs are still a piece of these portfolios, but we're actually adding individual securities and stocks into that. And with that, you're really kind of getting the white gloves treatment, I would say, where you have that dedicated investment professional, that you have that personal one-on-one. Portfolios are actively managed. We are discretionary portfolio managers. So what that means is that when we meet with clients, we give them a recommendation. We explain to them the strategy that we have. We present them with maybe a snapshot of what this portfolio looks like. But ultimately, going forward, any rebalancing, any buying and trading, that's stuff that us as portfolio managers, we will do as we see fit. And choosing the right advisor. Now, whether it's us or whether it's anybody else, ultimately, you as an individual obviously have to find the right fit. And that's, I say that to everybody, is that, there are certain things, of course, that you're going to look at. For some clients, Sharia compliance is on the top of the list. Management fees obviously is important. We think, our management fees, whether it's Express or Access, I joined ShariaPortfolio in 2019. Prior to that, I've worked at other financial institutions, RBCs, and some of the other independent investment firms. I can honestly say that our management fees are competitive, if not better than some of the big banks and investment firms out there. So I don't think management fee personally, of course it's important, but I don't think it should be something that, I think we get good value for our fee. That's pretty much what I'm trying to say. And of course, investment philosophy, you have to, every time I'm talking to a new potential client, to me, it's an interview, and what they're doing is not just myself, but of course the firm. They want to kind of dive in deep and think about and say, well, if I give you my money, how will you and how will this firm manage my money? What's the method behind the madness, really? So, those are just some of the factors that, when you're looking for an advisor, you probably should have a checklist of things that you're looking for to find that right fit. And then inshallah, if we're the ones, great, Bismillah, we'll be happy to, take you on as a client. If not, then, of course, we wish you the best, and we hope that you can find another advisor. So having said that, that's the end of the presentation section of the webinar. I guess now we'll kind of open the floor up and start taking on some questions.
Great, thank you very much, Nadeem. And again, really appreciate you guys accommodating the West Coast here. Some great questions on the board here. So I'll go in priority order in terms of which one came first. This question is from Brother Ahad. Can you shed some light on Wealthsimple launching an ETF for Muslims?
Well, Wealthsimple, I guess you could say, is a competitor of ours. They do have a halal portfolio that they do offer. As far as shedding a light on them launching an ETF, I know the portfolio that they have, the halal portfolio, was actually based on an ETF in the UK. I mean, they use that as kind of their benchmark, so to speak, right? I've seen a number of Wealthsimple accounts from clients that are looking at us and saying, "Hey, I have an account of Wealthsimple. I'm thinking about you guys." And in the analysis of that, I can tell you that the performance of Wealthsimple Halal portfolio, although their intentions were good, the performance doesn't compare to our portfolio. It's as simple as that. I can't. As far as what Sharia compliance that they're using, I can't really speak to that. That I don't believe they follow IFE. I think they're following another standard that I'm not too familiar with. IFE is actually the most conservative standard out there.
Great, thank you. Next question from an anonymous attendee. If weapons are not considered Sharia compliant, does that include aerospace and defense companies such as Boeing, Lockheed Martin, and General Dynamics?
Yes, so it does not include Boeing and any weapon makers. So the quick answer to that is no, we don't buy, as of now, like Boeing more so than Lockheed, right? Because Boeing is obviously known for its airliners, but they are also in the weapons business. And so, they don't come close to passing really. So we refrain from buying those stocks.
Thank you. A couple of questions from one of my favorite attendees on this call. So Brother Taslim, what's the track record over the last 5 years, and how are they handling the pandemic situation? How would your portfolio compare to the current volatility with the pandemic and everything like that?
Sure. I mean, that's a great question, actually. So first of all, as far as the track record for 5 years go, specific to Canada, we got registered in January of 2020. So we only have a year to date, performance. And I'll be happy to share that with you. Again, we're having a December 3rd webinar, so maybe I might just kind of save that for that. But, for the 5-year number, the parent company is in the US. They have, they have a track record of their performance for the past 5 years. So we have in the US, we do have 4 model portfolios. We have an income which / conservative, moderate. There's an aggressive, and then there's an all stock. The aggressive is kind of like a growth portfolio. So there are 4 different types of portfolios. So not all the returns are obviously going to be alike. But what I can kind of give you an idea as far as our most aggressive, the all stock model, I believe the 5-year number is you're looking at about a low teen, I believe a 12 or 13% return. The growth is maybe a percent or low percent or 2% below that, which is around the 11% mark. Our moderate has averaged about close to 9% on a 5-year number. And the conservative one, I think, is also somewhere around the 6-7% mark. I can confirm those, but you're looking at around that number. But as far as the pandemic situation, that's a great one, because one of the benefits of working with a smaller firm like us versus say a mega billion-dollar behemoth is that when things changed, we were actually very quick to adjust to the pandemic situation. I mean, from my standpoint, what we did here was this: we did go with a work from home theme. If we actually do have a webinar presentation that we actually did on COVID. And if you want, maybe on our website, that webinar might be there. And we did do this, I think, back in May, if I'm not mistaken, or something just right after the lockdown. And what we did on that was we laid out our investment theme. We pretty much went e-commerce. We went video conferencing like Zoom. We went 5G. We went AI. We went to themes that we felt would benefit in a pandemic and a post-pandemic environment. And so, yeah, we were out of energy. We were out of airlines. We were out of a lot of those industrials. We almost had no exposure to industrials. And so the pandemic was a pivotal point for us. And, it really, I think, from a performance standpoint, allowed us to shine and outperform the market. And that's what I mean. Working with a small firm like that, a smaller firm versus, say, a mega behemoth, is that we're nimble. We're able to say, look, let's do this. Let's make this decision and let's go. And so, yeah.
I'm going to skip a couple of questions because this question was kind of related to just this last question. The returns you referenced, are they net of fees?
No, those returns are gross, actually. Sorry, because not every account is charged the same fee, so those are actually gross returns.
Okay, yeah. Thank you. But we're only looking at a 1 to 1.5% managed, well, anywhere from 0.5% to about 1.5% management fee. Is that correct?
Yeah, that's right. That's on. Yeah.
What's the yield on Sukuk bonds? What's the yield been on those?
Currently, so there's a Sukuk fund out there, SPSK. That's again launched by our sister company, SP Funds. The current yield on that ETF is actually about 2.5%, 2.45, 2.5% right now. And I will say that the yield is actually we expect the yield to increase, and I'll tell you why. Because as new Sukuks get launched into the market, we'll be able to take advantage of those Sukuks at the clean yield versus buying them on the secondary market. Hopefully I didn't get too technical with the attendee on that, but what I mean to say is that initially when we were setting up the fund, you're investing into Sukuk, but now with new funds, with new Sukuks hitting the market, we're basically getting par value and the clean yield.
Great, thank you. It's some great questions flowing in right now, so I'll go to the next one. Is the management fee deducted monthly or annually? Good question.
Yeah, that's a good question. So it is deducted on a monthly basis. We give you an annual rate. It is debited on a monthly basis, and it is actually based on the value of the portfolio, and it's prorated, meaning and I think the reason is that I guess you can say that if the portfolio continues to do well, and hopefully that means that we're doing our job, then naturally the fee for us will increase as well. But that, again, that's a vested interest. That only happens if we're doing our job and the portfolio is increasing in size.
Great, thank you. Another good question: will you get into real estate?
Yes. I don't know how I'm going to answer this question here. Stay tuned. How about that? Stay tuned. I think we might have we have an announcement probably soon. Hopefully, inshallah, before the end of the year. But that is definitely an area of the market where is of great interest to us, and we are looking at ways of getting into the real estate market. So my answer to that is please stay tuned, inshallah. Yeah.
Good. Thank you, Nadeem. Next question is, how does one make a halal profit in a Canadian TFSA?
So, and that's a great question, because the TFSAs, think of it like this. I'm going to use a metaphor here. TFSAs, RSPs, the different types of accounts, these are all pots, and the investments are the ingredients. What you put into the pot is what makes it halal or haram. The TFSA account on itself is not haram. It's how the money, once the money's in the account, what is it invested in? That's what deems it to be haram or halal. Now, the problem here in Canada is that most people go to their banks to open up a TFSA, and for whatever reason, the advisor there by default will just try to push them into a GIC. And so automatically this view is that, oh, so TFSA is haram because I'm buying a GIC and it's interest and da, da, da. Well, the fact of the matter is, instead of buying a GIC, you can actually, buy a sharia-compliant investment, a fund or a stock even, right? That's the difference, is as far as how do you do it, it goes back to that pot and the ingredient mentality. TFSA is just the pot. It's what it's invested into, the ingredient. That's what makes it haram or halal.
Great analogy, thank you. Is green investment or lack thereof Sharia compliant?
So I guess we're talking about environmental.
Yeah, I'm assuming so. The reference is to a green is green investment or lack thereof Sharia compliant.
Okay, so that's a good question. There's something called ESG investing, which is called ethical, social, and good governance investing. Sharia compliant investing is kind of a subgroup of that. The ESG market is huge. And what ESG really is, it's kind of like investing, with personal beliefs, or or something else, some extra criteria, such as a company having good ethics, being a good corporate citizen, socially, and so forth, right? So, when it comes to energy or green, um, an oil company, for example, which is not obviously not green, it can be Sharia compliant, but it's not necessarily a green investment. In our portfolios, we do get clients sometimes who don't want to invest in areas like that, and that's fine. So we'll customize the portfolio and not invest into those companies. Um, is certain green investments are halal. They have to meet the criteria, though. The criteria, of course, is the income, right? Is 95% of the income halal? And of course, they have to meet the debt ratio. So there are certain, for example, there are some solar companies, right, that they're doing good, but they have too much debt, and because they have too much debt, they don't meet the criteria, so we can't include it. However, there are also some solar companies or other renewable energy companies that do meet the financial criteria, and so therefore they would be Sharia compliant.
That's a great example. Thank you. Here's a basic question, but a very good one. If I put $1,000 in a TFSA, how much will I be able to make at the end of the year?
Well, it really kind of depends on which portfolio, what your investor profile is, and again, we do a lot of that discovery in the initial meeting, as far as what's your level of risk, what type of return are you looking for, and based on that, then we would obviously make a recommendation, right? What I can say here is this: we don't guarantee a return on any of our portfolios. We can give you a level of expectation as far as a particular the market, or in a particular portfolio, for example. And I guess the way that I'm going to answer this is this: the S&P 500 over the past 90 years, I think has averaged about 9.8%, close to 10%, let's just say. If we were to use that number as the benchmark and say, look, if you're invested in the stock market 100%, right, what can you expect? I would make the argument that, 10% is probably a number that you should look out for. Of course, if your portfolio is, not 100% invested in equity, let's just say it's only 70% invested in equities and maybe 25 in more safer, like Sukuk, for example, then of course your expected return is probably going to be a little less than 10%. It might be, 8.5 or something to that effect, right? So that's, again, there's no certain way to answer that. I can only kind of give you a sense or a guideline as far as what to expect.
So a 9 or 10% return on $1,000 would be about $90 to $100. Correct me.
Yeah.
Next question. Do you have an imam who could answer more specific religious questions? For example, my existing company investment RSP is through BlackRock portfolio wasn't 100% halal. What should I do to offset that? Should I donate all of the profit or some percentage, or what should I do? Please guide.
Okay. Well, I understand the brother's issue here, because, he's in a situation where he's at a company. He has this, plan that the company's helping him out for his retirement. I mean, as a firm, we are trying to look at, kind of coming to this market. In other words, the group retirement plans. Again, I would say stay tuned, right? Hopefully, inshallah, we can be, because I've worked with these plans. I know exactly what this brother's talking about. our goal is hopefully we can be on that list with BlackRock. So therefore, the Muslim employees, and some of these companies are huge, right? Like like a TELUS, for example, right? They probably have 5,000 plus employees, and so in a situation like that, they have to be able to kind of offer some of their employees an option. So we are looking at that, but for the time being, as far as what should you do to offset that. The only thing I can say, is the guideline that I can give you here is this. If there's not a Sharia compliant fund out there, and I'm not a scholar, I'm not an imam, I can't give you any fatwas and say this is the right thing to do, but I'm talking about intention and maybe trying to make the most of it. You can do one or two things. Either number one, you don't participate in the plan and you explain to your employer that, look, I can't do this. It's against my religion. So, you speak to them about that. The other option is, there might be some ESG funds in the lineup where, again, it's not Sharia compliant, but they're investing into. They're staying away from the eye test ones. They're staying away from those companies that are overtly, in sinful sectors. Like, for example, they're not into casinos, gamblings, and weapons and all those other sectors. So that would, I can, I'm hoping that I should try to guide you in this. But it's tough to say, but if you should offset that with profits, yeah, I'm not an imam. I wouldn't be able to give any fatwa on that. We can reach out to the, so we have a Sharia, we do as a firm, we have Sharia audit, like in the US, for example, we get a annual Sharia audit. We can reach out to certain, bodies such as that to seek guidance on a situation like that and maybe get back to you on that.
Larissa was kind enough to say thank you for your response to her question. So thanks, Larissa. Next question, and I know we're running a few minutes behind schedule here, but is the management fee on returns or on total invested amount?
The management fee is on the total investment amount. So, for example, 100,000. If let's just say the fee is 1%, 1,000 would be the fee on that. Of course, if the portfolio value were to grow, let's just say to 120,000, then it's going to be on 1% of 120,000.
Thank you. So when you adjusted for the pandemic, was it the ETF or was it those who had individual stocks or both?
So I should have been clear about that. The pandemic was happening in the actively managed portfolios. And so we were, the ETF is a passively managed fund. And what that does is it goes through the S&P 500 and it chooses stocks that meet the Sharia compliance standard, that pass that, and it puts them into the fund based on a market cap weight. So the ETF, from that respect, is a passively managed fund. Even if, let's just say, there was if there was an industrial stock, it would hold that and it passed that, whatever. The pandemic example that I gave you, that was really kind of being done on the actively managed. That was being done in our access accounts and with our individual stocks holdings.
Right. I couldn't have thought of two better last questions here, Nadeem. Can I switch my RSP to you?
Absolutely. So, to get started, you can obviously contact myself. My information is there, my email, my phone number. You can visit our website at ShariaPortfolio.ca. There's a tab there that says Get Started. And, if you just click on that, there's another tab that pops out that says Questionnaire. Fill out that questionnaire. You can include your name, address, your particulars. That's to kind of get started and into our system. And then, of course, once you do that, inshallah, we'll be in touch and we'll take it. We'll take the next steps to transfer that account over.
Thank you. And then I believe it's the very last question here. Do you offer special investment portfolios for students?
Well, I mean, we have the RESP account. As far as students go, a lot of students, young, young clients are of the mostly of the express category. That's not to say that they can't be accessed, but I think when we're talking about young students and just young generation, right? What I say to them is, build your core, build a foundation, and make sure that when you're investing for the first time in the markets or whatever, that don't make it your last. And what I mean by that is, don't go for the flavor of the month stock tip that you might have read on some board or buddy told you about, because sometimes what ends up happening is if that doesn't pan out, then your first experience is your last experience. And so what you want to do as a young student, right, is build your core. That means, what I recommend is go with an ETF where that ETF gives you 200 stocks across a broad, sectors, and it's more diverse than, say, for example, if you got that one hot stock tip and guess what, your timing was off and now you're down a whole lot. So that's we don't have a specific account. That's why I think with the Express is an offering that I think appeals to students. And again, as a professional, as a guy, my advice is to look at it from building the foundation rather than focusing on small things like the window. Again, I used a lot of metaphors, and I promise that's the last metaphor I use tonight.
On that note, a last commenter is from participant Jassim. Thank you very much for all of the answers, Nadeem. We appreciate all the transparency and all the metaphors you used. They were great analogies. And thank you to all the participants who attended. We apologize for running a few minutes over time, but we really appreciate the fact that you're able to join us this evening. And we hope that your families and loved ones are keeping well, warm, and safe right now, especially given the current year we've had. But wishing you all the best. Any final comments, Nadeem?
No, I think you've pretty much said it yourself. I look forward to hearing from some of you, or maybe even all of you. My information's there. Also, like I mentioned, we did hire a financial advisor out in the Vancouver area. And so Shamil, I'm sorry we don't have a slide for you, but we, his email address is shamil@shariaportfolio.ca. So it's SHAMIL@shariaportfolio.ca. So for those of you in the Vancouver area, if you'd like to reach out to him, you can reach out to him as well. Or of course, you can obviously reach out to myself, inshallah.
Thank you, Nadeem. Thank you, everyone. Have a wonderful evening. Assalamu alaikum and Qud Hafiz.
Wa alaikum salam.